Hello, everyone. Joshua Hayes at BigWaveTrading.com. First off, my heart goes out to everybody in LA County as someone that went through the Lahaina wildfires and still lives in Lahaina. Um, just the devastation is shocking and it just brings up a lot of bad memories. And my heart goes out to you guys. I hope everyone is staying safe. But that is not what these video lessons are for. These video lessons are for education and for giving you trade ideas. And I actually do have one, despite what the market did for Monday. But first off, I want to keep everything simple, guys. Whenever it comes to the market, I like to keep things simple. There's basically, I have 5 momentum trend indicators that I look at on. 2 of them are on Thinkorswim, 3 of them are on Telechart. And the more green, the better. The more size I take, the better the quality of the long signals, the more it gets. And it really is a difference between putting like maybe 1% of the account capital at risk versus 5% of the account capital at risk. It's a difference between putting 25% of the account capital into a grade A setup versus 5% of the account capital in a grade A setup. Right now, we're about at a way less than 1% total risk of the account per new long position market and no more than 5% of the total account value into any one name. And why is that? When we look at the QQQ, it's going to be easier to see on the other charts. I don't want to get too granular on this, but the 21 EMA is coming down towards the 50 SMA, which is that gold line right there. It is the last index to not have that cross yet. But price wise, I was actually hopeful on Wednesday's defense at the 50. Considering how many stocks are in my scans even today and on Wednesday, I was hoping that Wednesday was going to lead to a good bounce. But that jobs report, nothing you can do about it. We are now double red on the QQQ with that tickets indicator below the 0 line. TSV red, tickets indicator red, and both are below the 0 line. That's very important, as you're going to see here. SPY, double red, below the 0 line on both. The 21 EMA has crossed the 50 SMA. IWM, the 21 EMA, the light blue line, is already below the 50 SMA, double red, and below the 0 line on both. The DIA, double red and below the 0 line. Here's the slightly good news and the hopeful good news. The 2 momentum ETFs that I track, FFTY, is still above the 0 line on the tickets indicator, but look at that stair step red since the highs. TSV is red and below the 0 line. So as you can see, across the board, it's red and red, but the only small hopeful sign short term is that the ARC ETF still have the 21 EMA well above the 50 SMA. We're holding the lows. Yes, we are double red. Yes, the TSV is below the 0 line, but the tickets indicator is still well above the 0 line. And if you don't know why the tickets indicator and that 0 line is so important, we'll look at SMH, which is one of the only indices, sorry guys, it's one of the only ETFs that I have that has any green. My MACD is green on Telechart version 22, as I will show you. Or is it 25? I don't know what the Telechart version is now. But you can see here, the tickets indicator goes below 0, but as it stair steps green, you can always ride the trend because the longer term weekly up trend is up. Now we stair step red, get below the 0 line. Each time we stair step up and it's green, that's good. But do you notice how this indicator is below the 0 line the entire time? Have you noticed that since that has happened, price has gone nowhere? That's why it's an important indicator for me. It told me that each time that we stair stepped higher, odds are we'll find resistance with our price appreciation. When it's above the 0 line, normally it's a nice ebb and flow. Not always, but whenever you're below the 0 line, you got to figure at some point you're going to run into resistance and reverse. But the SMH for now, heck, at least from the lows, we're still stair stepping higher. That is a positive, but it's not that great of a positive. So now getting over to my Telechart version 24 charts, we can see that QQQ, we can see that 21 EMA inching towards the 50 SMA. But here's my momentum and trend indicators, and we'll just keep it simple. Green light means go, red light means no go or slow if you're getting long signals. QQQ, triple red, SPY, triple red, DIA, triple red, IWM, triple red, FFTY. Hey, shaking money flows at least green. So I do actually have one green. I didn't even know that. I thought they were all red. But so CMF is green and ARC CMF is green. So there's still some hopeful there. But this was the main ETF whenever I consider SMH like QQQ, DIA, FFTY, and ARC just tells me how the momentum and growth names are doing. And it's good to at least see some green there. But the SMH is the only major ETF that I track that has any green. So right now it is a risk off environment, still an overall uptrend. If you look at a weekly, everything looks fine here. I don't think there's going to be any real problems to get below the 21 EMA, and then you still have an uptrending 50 and then an uptrending 200. Yeah, it could be a severe pullback, but I'm telling you guys, as long as we're above the 200 weekly, 200 SMA on the weekly time frame, I'm a buyer of those dips. So you can see here on QQQ, you got down to the 200 weekly. What happened? Rally. SPY. You get down to the 200 weekly. What happened? You rallied. 200 weekly, rally. 200 weekly, rally. The problem comes when you get below the 200 weekly, roll over, find resistance at it, and then break to new lows. That's when bad things can happen. Until then, I'm still a secular bull. Pullback is welcome on my end. Take it day by day. But right now, short term, it's a risk off environment. And I believe I had this drawn for everybody. I thought this break from the head and shoulders on Wednesday to members in the video lesson was pretty bad. Hopeful again. But what did I say during this video lesson after Wednesday's market and in the commentary? Nice one-day reversal. But if you don't think the algorithms can immediately send it lower, you just don't understand this current tape. And at the same notion, if you don't understand that we can do an undercut and rally on Monday and follow through on Tuesday and rally higher and possibly be ramped to new highs, you don't quite understand the market environment we are in. To end this portion of it, oh, look at that TNX. So I didn't even see this today. Wasn't paying attention. We lost power today on Maui. We lost internet. We actually had a minor windstorm in the morning. So kind of was I'm using my mobile hotspot currently to make this video lesson as we still don't have internet, but I kind of missed the TNX move, but I expected that breakout based on that jobs report. But look at that, we're inching closer and closer to 5%, and that's why you see small caps doing so bad. So what is doing good? Well, I noticed commodities on the back of that jobs report rally today, and gold actually looks pretty darn good. Even silver, we're holding that 200 simple moving averages. We've curled on these two indicators. The TTM trend momentum, which is hard to see here, has curled higher. So that's a positive with gold, and that leads us to our only new long position. You do not have to take it if you do not want to, obviously, due to the market environment. And I have to reduce size due to the overall market, not how recent long positions are trading. I actually had 3 today. LRN triggered and filled. Got to immediately start to get out of some of it due to the intraday reversal, but at least it was green today. AGX, at least it was green today. Everything looks normal there. I'll treat it normally. And then TLN, green. So all 3 new swing positions from Wednesday's session were green today. There was one other one, but it didn't trigger and fill, and it held up today. I'll go ahead and post that for everybody. Pega. So Pega still looks fine. No trigger, no fill. The 3 that triggered and filled, they're working. So for Monday, CRS is my only long idea. On a daily time frame, we have a pocket pivot point signal today. We have a loose squeeze. TTM trend momentum is flipped bullish to the above the 0 line on that indicator after already going through a slingshot. Triple green. And more importantly, I want to show you guys this balance of power. On this volume truncation day, it was a volume truncation max green bop day, and I know this indicator is trending lower, but still, it's still green. So green, 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 pocket pivot point signal bouncing right off the 21 EMA, the 50 SMA. Is it a little extended from the 21 EMA? Yeah, so it's not perfect. I'll be looking to get long above the high of the day, and I'll be calculating my size actually from this low, and my final stop is going to be this low, because in this market environment, it's always high odd probability, not not high odds, but it's a higher chance than not that you're going to trigger, fill, reverse, and fail. And I would rather not lose a full 1% of the account capital by calculating my size from here. If I calculate the 1% from here, a failure here would be about a 0.33 R loss. And now if we look at the weekly time frame, we have things in alignment. I know we are double red here, but we're above the zero line on both of these indicators. We're green on the Chaikin money flow. That's really all I look at. We found support right at the weekly 21 EMA. So I actually really like this setup going into Monday. I just don't like the overall market. So if it triggers, fills, and fails, will I be upset, shocked, negative? Not in this market environment. Have a great rest of your weekend, everyone.